Welcome everyone. Today we are having a discussion about economic and industry analysis. Remember, this is a series of whatever we are talking about since uh, previous lectures. So this is a series of whatever we are talking about how to pick stock or investing in financial markets. We have conducted very detailed fundamental analysis. In fundamental analysis, this is the last level of analysis which deals with economic and industry. So fundamental analysis ends with economic and industry analysis. And remember, from next session, we will start technical analysis. So this is the last episode of fundamental analysis. So I hope this will go well. This is the agenda of today's session, that what we are going to talk about in today's session. We will talk about what is economic analysis and why investor must understand this. Different terminologies related with economic things that linked with investors. They need to understand investor like GDP, inflation, and interest rate, and how they are linked with investment decisions. Economic cycles and sector rotation strategy, how we can do it within in a stock investment, how we can pick stock, that is top down investing strategy, economy to stock picking. This is the actual thing that we do in fundamental analysis. We will conduct industry analysis, pastel analysis, that is the all of the different sectors outside of the economy. Then we will talk about how the real stock selection is done on the basis of key indicators and some examples. And then investment portfolio, that how you can develop. So this is what we are going to talk about in today's session. Before you pick a stock, we need to understand the economy where that stock basically lives in. So we need to understand economic analysis and why every investor needs it. Economic analysis is basically studying the health, direction, and drivers of economy, where that basically leads to corporate earning, and it is also linked with the performance and stock prices. So that's why economic analysis, understanding economic, is very important. Now the question is how this is very important. I give you some information. Let's say 80% of stock movements, study shows that 80% of stock price direction is basically linked with different sectors, and that is linked with overall economy. So the way economy is moving, stock market is moving in a same direction. Let's say how it really happens. Let's say the example that the best Nigerian bank stock fell by 40% during the 2015 oil crash. So this is just like how economy and stock, economy and market are linked. You see an economic event, oil crash of 2015, people are well aware about how Nigerian banks have defaulted and their stock prices are falling. And why it is falling? Basically the main reason is basically oil crash of 2015. So you can see the interlink between how a macroeconomic factor, the key economic factor, are killing the stock prices either in a same direction. If they are going downward, stock prices are falling, and if that they are moving upward, stock prices are going in a good way. So this is how economy and stock prices are very much linked. Secondly, these economies basically derive corporate earnings. Whatever firm or whatever the business, whatever the organization is earning, let's say, that is basically reflected that how economy is performing. Let's say when GDP grows, overall gross domestic products, companies basically start selling more. So ultimately, we can say that companies are producing more and they are selling more, which is ultimately is reflected that GDP of the economy is going well. So again, there is a very much interlinked how a business is performing and how economy is one of the driver towards the linkages between these two factors. Let's say when inflation rises, the stock price, the input of cost, that like buying price, inventory prices, stock prices, they are going upward, so they will eat margins. It's mean when there is more inflation, there is less earnings ultimately. When inflation rate falls, so profit expands. So it's mean GDP, inflation, that is directly linked with companies earning. That's it. Safaricom's revenue grew by 15% in 2023 when Kenya's economy expanded. So that is, Kenyan economy is expanding, and we can see a firm's revenue is increasing by 15%. So there is a very direct link how economy is expanding and how revenues are increasing. Same management, different macro development. So there is no such change in management of the company. It is just like how economy has reflected in from stock prices. Another example, basically this economic analysis helps to find opportunities early. This is what is the exact thing that we need to understand why economic analysis is really very important. Let's say professional investor, what they use economic data in order to allocate sectors before whatever the happening in the sector. So it's mean industry comes after economic analysis. Once you do economic analysis and industry and sector analysis, it will help you allocate your capital in a best direction. What is the best direction that gives you maximum profit? So this is how these things are interlinked, right? So the example is like investor who tracked Ghana's IMF reforms. I have tried to include a very much African context so you can link easily that how these economies and stock markets are linked, particularly in African region. Let's say the Ghana's IMF reform program in 2023. It bought GSE stock early, so before the 40% market recovery. So it's mean once the people have a good economic analysis, they can well before the time they can invest in GSE stocks and they can earn high. This is how economy stock prices they are linked. They are linked with earnings and they are linked with finding some opportunities. So that's why understanding economic analysis is very important from an investor point of view. So if you are investing in stock market, you need to understand the economic analysis in a very detailed way. Now, let's say this is again a clear picture that how GDP scoreboard is of an economy. If there is a rising GDP, the corporate revenues are rising, and ultimately stock prices are rising. This is the basically the interlinked how economy is linked with stock prices. Ultimately, you are buying stock prices. I just give you an example that how this GDP is linked with your investment and linked with your revenues and it linked with your stock prices. This is a very clear example. On the this column on the this chart, you can see Ethiopia have an highest GDP growth rate, followed by India, Rwanda, Kenya, Ghana, Egypt. Global averages, USA, Eurozone, South Africa. They are all different GDP growth countries. They are selected countries. But that information we can get from this. Just look into this GDP to investment decision pool. If your GDP is higher than 5%, let's say if your GDP growth rate is higher than 5%, which means which means it is overweight equities. Corporate profits are likely to beat expectation. So what exactly we have to do? This is basically the buying cyclicals. The recommendation is buying. You are basically buying in these economies. Another example is, let's say, if you are if your GDP is 2 to 5%, between 2 to 5%, more than two and like less than 5%. So that is very neutral market. This market is neutral. The selective stock price picking could be done. Look for sector winners within the moderate growth. Like who is the sector winner? A sector winner is mean like there are within a cement sector, textile sector, whatever the different sectors, banking sector, or whatever. You have to pick the sector winners, which sector is doing performing well, and then you have to pick if your GDP is between 2 to 5%. If your GDP is less than 2%, there are countries whose GDP is less than 2%. Here, your investment needs very defensive strategy. You have to shift to FMCG's product, healthcare industry, utility industry, since they are basically giving you profit, but you should not invest in all other tech related or high growth stocks. So you basically avoid high debt growing stocks. This is how your strategy will be very defensive in these economies. But let's say if you are the GDP is less than 0%. So again, that is underweight equities. You have to move to bonds, gold, exports led defensive place. Rather than investing in equities in stock, you need to invest in gold and bonds and debt market. So that is not a recommendation at all to buy any stock. Again, why they are linked? You can see they are linked because of your GDP is linked with earning and earnings are linked with stock prices, since this is a very positive information. So this information, I'm talking about fundamentals. Fundamental is basically information. You see, this positive information and this negative information is basically reflected in stock prices. This is a very high positive information, and this is very adverse negative information that expect you need to invest in stock market. You have to buy. Here you are neutral, you are picking very selective stock. Here you are very defensive, and here no recommendation to buy any stock. This is how GDP growth and your markets are interlinked. So moving forward, we have talked about that GDP is linked. At the same time, inflation is very much linked. So inflation, you can get and benefit from the inflation as well. How we can get benefit? Let's say the real return is basically nominal return minus inflation. Nominal mean, let's say your return is 10% and inflation rate is 5%. So you deduct 10 minus 5, so your real return would be 2%. Let's say if your stock return is 8%, but inflation is 10%. So it's mean you are not getting anything. So you are losing. You are losing in real terms, you are losing 2%. So this is how your inflation is linked with this thing. Now, what we have to do if there is low inflation, which is around 1 to 4%, that is basically investor paradise. Those economies where there is low inflation, that is between 1 to 8%. Now, what happened basically? Consumer prices rising, FMCG, retail, auto sector, and profits are surged. That's a central bank can keep low rates. Banking and real estate, growth stocks, they basically very important in that aspect. Let's say the example of Morocco, where the inflation CPI, Consumer Price Index, which is one of the two major inflation is 2.15%. And their banking stock has rose by 18% year to year change, 18% yearly change. Let's say Kenya inflation fell to 3.5%. Fell means like it is down to the within the range of low inflation, 1 to 4%. So equity, bank stocks, retailed and lower provisions. If you are dealing in an economy where there is a high inflation, let's say that is more than 8%, so that means stock market will be facing some stress. Your input cost will be rise. Your margin will be less. Your earning per share will fall and stock prices will decline. This is how the inflation is linked with stock prices. The point is basically we need to understand is how these economic factors, how this economy is linked with stock market. And ultimately, if stock is declining, you are suffering losses. If there is high inflation, interest rate will high. So it will increase bond yields. If bond yields are more, equities are less attractive. So there is less likely that people will invest in equity markets. Again, profit in equity market, in stock, in shares, they will decrease. That's again, we have an example of Nigerian inflation, which was 33% in 2024. And NGX All Share Index, which is Nigerian stock market, their index fell 8% in real terms, 8% down. The reason is basically there was an high hyperinflation in this region. Let's say the example of Zimbabwe, where 100% inflation was there. Their stock prices, nominal gains, but zero real returns. There was some gains in real terms. Let's say if that example, there was gain, but ultimately, if you adjust for inflation, which is 10%, which is a very high inflation, and you are earning some losses. So this is how securities are linked with each other, right? So this is how, sorry, there was some issue. Anyways, so moving forward, the third thing is that is linked with stock market. The first one we have learned that how stock market GDP is linked. The second thing is how inflation is linked, and now interest rate. Interest rate is a very powerful variable with reference to stock market. When interest rate move, asset prices move. Now, how we know that why this happened or how it can happen? Interest rate. I'm talking about the interest rate that banks pay, state bank that determine within the monetary policy. Why? Basically, stock value depends on future cash flows, which is divided by discount rate, and this discount rate is basically interest rate. Let's say if there is high interest rate, the stock prices value will low. It will happen always. Since you see the equation, stock value is equal to future cash flows divided by discount rates. If this is high, ultimately the value outcome will be low. So this is how interest rate is directly linked with stock valuation and stock prices. Whenever a rate cut happens, what is rate cut? There was high rate and now rate is reduced. So usually we use the technical term, the rate cut. Let's say if rate is cut down, what happens? Net interest margin is compared to loan growth surge and net profit for all retail banks. So there is a net positive retail banks net profit. Banking sector, so we can increase the profitability simply. Real estate, mortgage rates will fall. Also, the REIT prices will high. Obviously, that is one of the benefit that we can link with investing. Consumer and auto market, EMIs, their prices and home prices will surge and sector basically increases. Growth of the stock, the future until discounted at low rates, so PE multiple expanded. So it's mean all these indicators, whether that is a banking sector, whether that is a real estate sector, whether that is a consumer or auto sector, whether it is directly linked with stock growth. Let's say of another side, if the if rate increases, policy rate is increasing, there is no cut in prices. Obviously, banking sector will adversely affected by this thing. Your net interest margin will decrease. If that margin will decrease, so overall, you will face in bad loans or bad debts sort of thing is happening. So ultimately, it will affect your banking profitability, and ultimately that will adversely affect your economy. The bond prices will fall basically when rate is increasing. Since the existing bond holders, debt holders, they will basically lose the value. The companies with high debt, their interest rate will increase, their profit will fall, and stock prices will crash. In that case, defensive stock like pharma, utilities, they they may provide you some profit, but still that is unluckily that you will get some profit. So all these things, they shows that these variables, the GDP, the interest rate, and inflation, they are directly linked with stock prices. We have now discussed about these three things. Moving forward, this and forex and commodity prices is also one of the linked with stock selection. Forex and commodity prices. Let's say I'm giving you just an example that how it happens. If currency is weakened, let's say naira and rand currencies, that is basically with reference to uh, exporters who are basically stock market winners and who are losers basically. Exporters of miners, oil, agri, they will basically stock market winners. And importer retailers, manufacturing and imported imports businesses, they are dealing with these things, they are basically the losers in that market. If your country currency is strengthening, if your currency is strengthening, so importers now this inversely will happen like this. You see, inversely will happen. Importers like airline industry, manufacturing unit who is using imports is basically the stock market winner. If your currency, if you are experiencing your currency is strengthening, so you will lose if you enter into a market that is export based, right? Let's say if we talk about oil prices, and if oil prices are rising, let's say Brent price is higher than $80. So the stock markets who are winners are basically Nigerian, Angola, Algeria, government revenue surge, and all company stocks that have stock market winners. While importing countries like Kenya, Ghana, and Ethiopia, they have suffered some losers in that financial market. And let's say if we talk about gold, copper, and cocoa rice, right, all the commodities, if these prices are rising, basically if you are investing in mining companies, Anglo American, and you want you will be a stock market winners. And ultimately, if you are manufacturing and using metals as input, you will cost. Let's say the copper industry. If you are producing anything that uses any copper or silver sort of thing, let's say the solar based technology, if you are using, and you will ultimately will be affected by this, either the gold or copper prices are increasing or decreasing. So all the forex, commodity, interest, all these things are linked with stock market. Now, one more thing within the economy we need to understand, the economic cycle. Basically, this economic cycle is very important to understand before sector rotation, that how you will rotate your investment across different economies and sectors. This is linked with economic cycle. So basically, there are four economic cycles. Every economy, every sector, every business, every country have to go through within these four stages. And every economy moves in a cycle. Each phase reward different sectors. So now we need to understand, let's say there are four sectors, and it's never mean that you will always lose in contraction or you will always get benefit in peak. You will get benefit in expansion and recovery. No way. It is your strategy that how you will shift your sectors in order to increase your uh, profitability or stock market. You can beat the market via your investment strategy until you know the economic cycle, and then you can manage your investment and stock market accordingly. Let's say if you talk about recovery phase, the recovery phase, your economy was in very depression and now you are again getting back. And that is basically in economic cycle, we call it that is a recovery side. You are now recovering from a very depressed sort of thing. What will happen basically, GDP growth turns positive. So it's mean from a negative to positive, or from a very low growth to are moving now into a very high growth. So it's mean your economy is recovering stage. That is recovery stage. Unemployment start falling. So there is no more jobs are there. Unemployment is now decreasing. So rates at floor are being cut basically. Rates means like interest rate and other um, interest inflation rates, they are basically decreasing. Now, if you are facing your economy, if you analyze your economy, that this economy is now in recovery stage, what is best recommendation? What is the best sector? Now, banking sector in that case, real estate sector, and consumer sector, and auto industry. These sectors are highly recommended sectors for your investment. This is the sector analysis. You are analyzing your sector in the light of economic cycle. I hope you are getting me that what exactly we are doing. We have to put our economy that either we are in recovery stage. If we are in a recovery stage, so according to research, these four or five sectors, banking, real estate, consumer, and auto, four sectors, they are highly, let's say the Kenya 2020 covered post-COVID area, the KCB Bank, their profit, basically their stock movements has increased by 45%. We have already given an example of Safaricom, which is 30% increase in last 12 months. Let's say if your economy is expanding now, let's say it was a negative recovery stage, it is growing positive, and now it is expanding. GDP is accelerating. The GDP growth rate has multiple now as compared. It's not a very small growth, but now growth is very multiplied growth phenomena is there. So it's mean business investment is basically rising. This is the exact point that people are investing. They are investing in these businesses. They are investing in different businesses. Since GDP is accelerating, there are more opportunities. People are investing. Corporate earnings are increasing. They are beating the estimates. Whatever the real profit, they are basically beating the real profits. So they are generating more and more profits. Once you know that economy is an expansion cycle, your economy is currently passing through a very expansion cycle. What is best sectors in that case? IT industry and industrial sectors, capital goods, long-term goods, infrastructure. These are the sectors there where you need to move your money in these sectors. I mean, like in moving in these sector mean the firms in IT industry, you have to pick the stock of IT industry. You have to pick the stocks of all the industrial manufacturing businesses. The businesses, they are producing capital goods or infrastructure based companies. You have to select these companies for your stock. Let's say the example of Ethiopia, which within the phase of 2023 and 2024, which is considered to be an expansion stage where the GDP has very accelerated over the period of time. And we have found that within this time period, the Ethiopian airline profits, they tripled basically. So this is how the IT, capital goods, or industrial goods sector have performed exceptionally well. If you have invested in these stock market of these economies, you will get maximum profit. Similarly, industrial parks fully occupied by this thing. So expansion is basically that we need to invest in IT industry, capital, and infrastructure sort of things. Let's say if your economy is now at its peak level. So you have seen we have a very down, then we are recovery, then we expanding, and now we have moved up to the highest level, that is the peak stage. So let's say if there is a peak stage, it's mean GDP growth has maxed out, a maximum GDP. Now this is no more potential at all, right? That is the maximum point. Inflation is rising obviously, but that is not adversely affecting your economy, since that is one of the phenomena that GDP has increased and now inflation is increasing, and the interest rate are now increasing since there is more opportunities, there is more expansion, and so on. In that case, energy, materials, commodities, exports businesses, they are highly demand. We can see the example of Nigerian oil boom. So NNPC revenues, which is one of the energy sector company, their revenues recorded a high. Or other groups, they have an expansion at peak. So if you have invested in these sectors and you have rotated from, let's say, an IT industry to energy sector, so you can increase your investment up to a very maximum level. But let's say if your economy is in contraction, let's say from peak that is now going down, contraction, GDP is slowing or even negative, corporate profits are falling, unemployment is rising. In that case, utility industries, healthcare, and pharma, they are basically a best sector that still economy is going downward, but you can take profit. So as an investor, we need to understand the economic cycle and how we can use this economy cycle in selecting our sector or industries. This is how the top-down investment strategy is being done. If you look into this thing, it's very interesting that how we will start. Investor filter from global. You need to analyze global economy. Why global economy? Global economy is basically one of the indicator that will lead to what is happening in risk, what is happening to the overall economies. Oil prices, global uh, political scenarios, global scenarios, what are happening, the war conditions like this, how gold prices are moving in a global market. They are certain indicators. So you need to analyze global economy first of all. So need to understand what is risk and what is risk of environment. Once you have analyzed the global economy, you move to, in step 2, you are now selecting the region or even sometime countries. Region by mean like, okay, what region you will like to invest on the basis of your analysis from the global economy, European countries, East Asian, African, European, US market, whatever, Southeast or whatever. So you will select the region. Obviously, you will select on the basis of different growth rates, different GDPs, different inflation, different forex changes, their political stability, their FDI, all economic indicators. It's not you are selecting a country that I like to invest in this country. Never. What is the economic indicators that will help you to select that region or a country? Once you have selected the region or even country, now you will select the right sector. Within the sector, which sector is doing well? We have talked about in last previous slide sector on the basis of business cycle or economic cycle, economic conditions. Which sector will outperform? That's we have seen. If I go back to, if you remember, we have talked about on the sector rotation in last slide, that if there is in peak season, what we will need to do, what if we are is in contradiction, contractory stages, what we need to invest. If that is, you can say, if that is growth stage, what is best sector that can outperform. So we need to pick the right sector. If sector is done, now we need to analyze the industry. Industry analysis is very important, where Porter's five forces model, we will talk about this model to get that which industry have a competitive edge, which industry have a competitive edge, industry worth investing, entry barriers and dynamics. So industry specific analysis is being done. Once your industry pastel analysis is being done, then you select the best stock within the sector, which company has the strongest average profits, earnings, and valuation. So this is how we conduct whole economic and industry analysis. There are different steps, but we start from global economy to the region and country, then the sector, and then the industry. And within the industry, we will pick now this is the exact company where we need to invest. So this is whole analysis that will help to perform or beat the market as well. So let's talk about industry analysis. After the economy, the best important thing is industry. Industry analysis is really matters in terms of investment. How? Let's say company is doing great, but that company is in very terrible industry position. Or even a good company in a great industry is always give you a maximum profit. How? Let's say we talk about bad industry. What is bad industry basically? How we can say what exactly is bad industry? Let's say if we talk about African context and print media of 2010, let's say like newspaper had loyal readers and good management. But the digital disruption destroyed the whole sector. Now, hardly people they get the newspaper and they read these newspapers. There are a lot of digital based media is there. The print media is likely no one is. This industry is now becoming a bad industry. Even very good companies, they are they are struggling basically. Now, a company is doing well, but overall, the print industry is not now doing well. So obviously, this company will fall, and you ultimately you will lose money. The example of good industry, even a firm is not doing well, but since that firm, their business that is basically in a good industry, and they are earning. Let's say mobile money in Africa within the range of 2015 and 20, you will see mobile money based like EMI, like e-pesa and sort of things. They are not that very companies. They are very have a good reputation, but since industry is moving, since mobile industry is growing, Even small players like Airtel, Africa, and Telcom, Kenya, they made significant gains. Just being they are in the right industry. They are in the right industry of mobile fintech at the very right time. I say again, a mobile company like Airtel is not that much big company like African print media. But since that media is now not in an good industry for us, and that mobile companies like Telcom and others, they are basically in the right industry. And even they are not that much big players, but they are earning profit. So we need to understand which industry is giving you the maximum profit, not the firm basically. Since if you pick the right industry, you can pick the best firm. Now we have to make some analysis. How we do the industry analysis? This is very important. We need to industry size and growth. We need to determine the industry size and growth. And here, is the industry growing faster than GDP? What is the penetration rate? What is their low penetration? What is the massive opportunity in that industry? If your industry is growing rapidly than even GDP, so that means this is a very good strategy. Those good industry, you need to invest in that industry. What is your competitive structure? How many competitions, how many players in the market in your competition? What is market concentration? Market concentration mean how many firms are there and what is your understanding in the market? How is pricing is the pricing is powerful? Is it possible? Maybe there is chance there are very few players and there are high barriers. So margin will be, they will get the pricing powers. Regulatory environment is again one of the important aspects of industry where we need to talk about is the industry is friendly to investors. Let's say the style of licensing, the forex exchange rules, the price control rules, state competition, in impact returns, and all these things. So again, that is very important in the context that these regulatory environment is important. Technology and disruption risk is this linked with this, since we are already know that industry, new businesses, AI, digitalization, and modern investing, they are basically the tools of modern investing. Now, in current scenario, we have to know that whether we are technology adaptive industry or not. If that industry is not technology adaptive, you will have an very serious issues. And then your industry economics, which is basically how much profit or margins you are gaining in that market. Earning before interest and taxes and depreciations margins. Return on capital employed. If your industry's EBIT is higher than 20%, so obviously this is a best market where you need to invest. So picking the right industry again means you have invested in a market where you can invest, where you can get the maximum out of it. This is the last important thing within the Porter basically identified the industry tools. That is basically suppliers, industry rivals, bargaining power, and threat of substitute. These are the Porter forces. This is your industry rivalry. Who are your competitors? Who are your suppliers? How many suppliers are there? If there are many suppliers, they will exercise low powers and you can enjoy good margins. But let's say if there are very less suppliers of your product, they have more powers and they can reduce your margins. This is how industry have a very much impact. You need to understand what is your supplier bargaining power. Industry rivals, who are your competitors, direct competitors, what is their position, how many buyers you have, and their bargaining power. Are they fragmented buyers, which means you can use high margins, which is equal to goods, or vice versa? Or is there any threats of substitutes? Maybe if there is threat of substitutes, so consumers or industry, they can easily move to other, and you will suffer some losses. Now, what is the rule that how we will decide? The rule is, if forces are high, if all these forces, supply bargaining power is high, industry rivalry is high, bargaining power of buyers is high, threat of substitute is high, it's mean there is low attractive, this industry is low attractive. Low attractive mean you need to avoid those industries where all these forces, supporter forces, if they are high.
It looks like we just lost our presenter. Let me see if I see him. Yeah, it looks like he just disconnected really fast there. I can't pause the class, but prepare your questions. The presenter will come back. I'm surprised because the connection, he had a really good internet connection. And then all of a sudden it just went, just disappeared. So prepare your questions. You know, what sort of investments are you looking at? What sort of industries are you looking at? And are you understanding the economic principles so that you can make good decisions and a good analysis? You can write your questions into chat. And you can also raise your hand. If you go down to the React button, down below, you'll see a bar for raise hand. You push on that, and we can see that you want to speak. Like you can see Suntum just rose his hand. So let's go. Suntum, go ahead.
Yeah, good afternoon, Misu.
Hello. Good afternoon to you.
Good afternoon, Misu Lambert. So just long time we didn't have a time to talk
Yes, it
because
is.
I am practicing public in prevention of the malarias in my country.
Yes.
Very hard work in his land zone, very difficult. My question is, do you know I like the economic areas. When you had been make the presentation, you had talking about the graphic. I saw the Ethiopia. Ethiopia is more than higher in terms of the present, more than the other countries. My origin, I would like to know uh, if you can talk about the gross debit produce of the Ethiopian in terms of the production of the commodity.
Yeah.
Why the Ethiopia have more than hires present more than the other countries? Because I know Ethiopia is African countries.
So why does Ethiopia have a higher what is it? A higher what?
GDP.
A higher GDP?
Yes.
Um, you can look at is their population higher?
In the graph.
Oh. Well, a lot of times GDP is based upon the population. Because if you have more people, you can produce more. Because GDP is production. You know, how much are you producing? So if you have more people, you can produce more. So do you know if Ethiopia has a higher population?
For me, I think that's depend for the production of the commodities. Can be the Ethiopia have the oil yields, they have the agriculture, the factories, and the more of it, the minerals. But I don't know that's the reality, the economic reality that of that countries. I know only that there is
You know,
the African Union Center.
you look at the land, you look at the land, you look at their resources. Like the land. Do they have a lot of agricultural land that's fertile for growing? Do they have minerals? You know, petroleum? Do they have
Yeah,
a larger
yeah,
population? You know, and you think of other resources that they may have is do they have a port or two ports where they can
exactly,
bring in, you know, imports and exports and then be able to funnel those
exactly,
to other African countries
exactly,
inland.
exactly.
So they have certain resources that can produce higher value or higher production. So that's how you there we go.
Thank you. Exactly.
Looks like our presenter is back. Where are you? Dr. Kasim Shah, are you back? I don't see you. Are you back? There you are. And let's see. Georgine says, yes, Ethiopia has a high population as well in Africa. So infrastructure, you know, you look at infrastructure.
Hello, can you hear me? I'm
There,
here.
Dr. Saeed Kasim Shah, you're back.
Yeah, there was some charging issue, so I was just trying to plug in. I was here, but I could not connect to my.
I was looking for you in the list, but I didn't
Yeah,
see
yeah,
you in the alphabetical
yeah.
order.
I was chatting like I'm here. Can you aid me?
Oh no.
So yeah. Okay.
Okay. Do you have
So
are you ready for questions?
we need to. Yeah, I will just. I guess. Okay, I guess we may we may go to uh, the the question answer session. Is the screen is visible to you people?
No, not yet.
Great. I'm just concluding my presentation. Okay. Now this is the last thing that I want to talk about is basically this is just an thought for you people as well. The best investor don't learn from frameworks. They apply them immediately and they start today. So what is the exactly what we have to do is we have to do economic dashboards using tradingeconomics.com. You can go, if you go to this website, tradingeconomics.com, you can check the GDP, CPI, and interest rate of different countries. Let's say you need to pick two African countries. Which country has the best macroeconomic equity and justify in 3 sentences? If you can do it, the next thing is you go for sector rotation. Based on your economic cycle, you have to decide which two countries are doing well. Then you can apply portals model. Let's say one industry, either that is in banking industry or that is in whatever the industry you pick, you just apply these 5 forces where you can select your industry. and you can write an investment recommendation, basically, which is basically investment thesis or a recommendation that what we need to buy and why we need to buy. So this is the whole idea of fundamental analysis. We have talked about fundamental analysis from different perspective, but ultimately we have come to the point that a strong analysis, via a strong analysis, you can beat the economy, right? It's not about the economy is not the stock market, but the stock market cannot ignore the economy forever. Anyways, this is the whole thing for today's session. Although there was a lot of things that we may discuss, but due to the short of time, we have discussed that how industry and all these things, they are very important in considering stock selection. So that was the whole discussion about economic and industry analysis for today. Now we can move to question answer session. Thank you very much.
Okay, we have questions out there. We see a lot of reacts going up here. I'll throw one in too. Marco, I think you're up. Let's go ahead and ask you to unmute your microphone. Marco, can you activate your microphone? Do you see a message on your screen to unmute your microphone? Okay, let's go to Abdoulaye.
How are you, Dr. Lambert?
Hey, how are you today, Abdoulaye?
The microphone is okay today.
Yeah, it sounds good.
Yeah, okay, thank you. Nice to meet everyone here. Nice to meet the professor. What is his name? Just Dr. Said. I get today a very good, interesting, I can say, a question for my professor. The GDP per habitants and the indice of human the human development of index. What does it mean in economically? What does it mean? And can the professor is the professor can explain me what is the importance of these two expression, economical expression? Thank you very
Yeah,
much.
basically, whenever we talk about human development index, so there are different indicators of these development. And whenever we talk about GDP, so GDP talks about uh, overall development, industry development, and all these things, right? How much there are macroeconomic factors, how these macroeconomic factors are performing, how these macroeconomic factors in terms of production, in terms of all these things, how they are performing, and ultimately how much goods they are producing. On the other hand, HDI, which is usually measured by United Nations Development Index, this is that measures countries' overall level of human development. This is basically beyond economic growth. Let's say if talk about health, education, standard of living, GDP is purely talk about how much you have in terms of import, exports, whatever the GDP criteria are there. So they are totally different thing. One talks about only economic development, and one talks about human development in terms of education, health, and all these standard of living. So this is how they are totally different things. They are measuring different
Okay.
from
So
GDP.
I can say what is why how to make the difference between the countries, the GDP per habitant for the countries and the human development index.
Can you repeat how?
How people, how economically we can make to calculate, I can say, the difference between the countries, the GDP per inhabitants per country, how we can it is basic by the economical possibility of each countries, or agriculture, or development of industrialization, or another things. I don't know.
All the sector, it
All the
includes
sectors.
everything. Yeah,
Okay.
import, exports, production, everything. But HDI, which is development index, human development, how humans are getting health facility, how humans are getting living of standard, their education, sort of thing. So one is very much a financial term, and which is very much qualitative terms, although we can measure it accordingly, but this is how we measure differently. Let's say how much earning I am having is one phenomena, and what is my standard of living, how much health, education, and other facilities I am availing is a different phenomena. Although they are very much linked. Let's say a country with high GDP, their people, their economies are facing a high HDI, right? Let's say in a
Okay.
country having a less GDP, so ultimately, if I'm strongly, let's say, I give you a very personal example. Let's say if I am financially strong, I
We
will.
need the PDF file of the course. Thank you, Professor. The PDF
Okay.
file of the course, yeah.
Sure. I will share.
Thank you very much.
Actually, the students need to go to the student portal to access the presentations, because there you can actually link into getting credits for the course. And Ngana asks, what are the factors of inflation? There's a good video that came out today on inflation. Maybe I'll link that down into chat here. So there's a good video that came out today by a well-known economist in the United States. I'll put that link into chat. A video called Navigating Inflation, Smart Strategies for Better Choices. So it describes inflation and the best strategies that you can use to actually not lose with inflation, but get ahead, but actually gain something by understanding how to work with inflation. Dr. Kasim Shah, are you there? I don't see you again. Did you disappear? Looks like Dr. Saeed Kasim Shah disappeared again. Okay. I will try to answer the questions. Ngana says, what is standard values of GDP? It's hard to know. It's just one of the things you look for is GDP is gross domestic product. That's what a country is producing. And a good standard is to look at GDP per person. And that gives you a sense of what each person in that country is able to produce. So you can get that number, GDP per person in a country. It is quite clear. Let's see if I can predict correctly and optimize at peaks of economic. I can hedge well against losses. Yeah, you have to predict correctly. That's that's the main idea. Predict correctly. And you can predict correctly by really understanding what's going on. And the more you understand, the better you can predict. What are the factors of inflation? Okay, I put up that video for inflation. Let me check to see if Dr. Kasim Shah is back. No, I don't see him yet. Okay, Stephen S., thank you very much. A few questions. I am planning. Okay, what you're planning a venture into phone manufacturing? There's a lot of questions here which are very specific to the industry. We don't have time to go into that here now. I'm also working towards establishing businesses in the food and beverage industry, specifically bottled water and fruit juice production. What are the major challenges entrepreneurs typically face in this industry, and how can they be addressed? Well, food and beverages, sometimes you have to look at your competition and look at your market and look at your costs. If you can provide a good product at a reasonable cost, you can get into the market. You just have to use your marketing strategies. Really think about how to market a product. Where do you market to? Do you give out free samples? What sort of discounts do you have? Can you service certain organizations so that you're bringing water to them on a weekly basis? So many things. I think when it comes down to working with that type of business, food and beverage, it's your marketing. It's the word of mouth, getting people to enjoy your product and then recommending your product to other people. That's how you're really going to move forward in the market. And number 5, as part of my conglomerate's vision, I intend to establish educational institutions since I do not have a background in economics. What knowledge, skills, or partnerships would you recommend to successfully build and manage education business? Ooh, that's actually a big topic there because you can work with international organizations to get funding. You can work with the government. You can work with public administration. And you can also do a private school. And so you're going to be a private school means that you're going to have parents are going to actually pay you. And if you have a public schools, you get money from the government. Private school, you get money from the families who go to school in your school. So it depends on what type of education you're doing. So that's a big topic. We should actually save that one for a whole nother class. And security services company. These are all great companies, and they're all going to take a lot of talking time, which we don't have right now. But it's good to see you're having these ideas. But think about marketing. Think about who would you sell your services to? Talk with them. Ask them, you know, before you go into business, talk with your customers. Don't just go into business and then say, here I am. Talk with your customers and say, this is what I'm planning on doing. And I want to know that if I do this type of business, and this is going to be my cost structure, these will be my prices, and these will be my services, would you be interested in this, in my services or my products? Just do some market research. And then that will really help you know whether you should get into the business or not. So let's see. Danielle says, I'm trying to do a project whereby we will take a log drug users and alcoholics to put them into work placement and requirements should I undertake, please? See, that you just have to work out the details. And ultimately, you're going to have to do like a cash flow projection. You're going to have to do financial projections. Where's the money coming from for you to do your business or your projects or your treatments there? Where's the money coming from? How much do you need to spend? Is it financially viable? So you have to get from the government. From the government? Yeah, just so you're going to have to look at what you need to do. Do you need a building? Do you need desks? Do you need chairs? Do you need forms? Do you need papers? How many computers do you need? How many lights? How much are you going to pay in utilities? How much do you pay in rent? Start listing all of these expenses. Do you need to contract out for lawyers sometimes or to accountants? Look at all of your expenses and then say, okay, how much do we get paid? Then you add in your employee expenses, the owner expenses, and that's all the money that you're going to have to put out. And then if your only source of income is going to be the government, then you could go to the government and say, okay, this is how much money we need to do this work. And if the government says yes, you're in business. They give you the money, You follow your financial plan and you do your business. I will have an office at the hospital. It's the government, and who's going to pay them? And it's the government who's, oh yeah, so if the government just pays directly some of your expenses, those are expenses that you don't have to list as your own expenses, right? That's the government puts that on their books, paying your rent. So you don't pay rent, you don't put it on into your accounting because it's money's not coming in, money's not going out. And so you don't even need to put it in as a liability or even as an asset in your books because you're just using the space. You don't have the space, you don't own the space, you don't pay on the space. So it makes it easy many times. So you just have to look at the money, where the money's going. All it comes down to is you have to monitor it. Right, there's a cost to monitoring. So you can put down a monitoring cost. Or wherever you have a cost, you can label it any way you want. Whether you're doing like an auditing service or you're doing even like cameras on site where you're using cameras to see if people are being honest or if they're stealing things or what's going on. Yeah, that type of security, everything has a cost. Not everything, right? If someone else is paying your rent, that doesn't have a cost. But you just have to look to see what you need to pay and can you receive enough money to cover those costs, including your payroll and taxes. I'm looking for Kasim Shah. Did he come back? Nope, I don't see him anywhere. So I think that's going to do it. So yeah, this was a class about industry and economic analysis. So it's about investing, but it's also when you start a business, you're also going to want to know about your own industry. Is there room for you to start a new company? And in some industries, it's hard to get in if you're a new business. In other industries, it's easy. But you're going to have to show why people should change to your business. If you can lower the cost, if you can improve the quality or accessibility, or you can give some sort of advantage that other businesses don't have, then your advantage will move you up into the market so that more people will come to you for what they want. And a lot of that does with marketing, the messaging that you give to the public to let them know why you are better and let them know. And then go out there and give some free samples, talk with people, show them your product. You want name recognition. See, when you're talking in your publicities or your advertisements, you always want to mention your name many times. Name recognition is huge. So when people hear your company's name, they say, yeah, I've heard of that. That's what you want. You want people to say, yeah, I've heard of that company's name. That's all you want. Is for people to know about your company's name. And then it makes it a lot easier for you to find customers. So marketing is key. It's not just having the product, it's having a name of the product, a brand for the product, or even a person. Like if you start an advertising campaign and you have maybe one person who represents your advertising. So it's the one person who's always talking about your product. And that makes it a lot easier for people to recognize your product associated with that person. It's very common nowadays to have one person who is advertising for a company. Because if you're on YouTube and you're seeing all these YouTube advertisements, many times you'll just see it's one person speaking for an insurance company or speaking for a phone company or speaking for a computer company or a data company. So, think about focus and identity. so that people can easily recognize your company. That's what you want. And then once people start recognizing your company and they have your phone number, they can call you up and say, okay, like in the case of water, you say, can you deliver the water to my business once a week? And then if you can deliver water whereas other companies can't, you have a big advantage because you can get a truck and then ship, drive the water to these businesses and deliver once a week. And and if you could do beverages at the same time, deliver beverages. Yeah, there's many ways to get advantages into the market. You just have to talk with your customers and say, what would make life better for you? If we delivered, if we delivered water, would you also want us to deliver food? Right? So yeah, if you could deliver, some food in the morning when everybody's coming to work. Yes, we can do that. Maybe you can't do it yet, but you can think, okay, I can put this together and I can find some food and I can bring some food. So instead of just saying no, say yes. I can deliver food with the water too. Because then now you have an advantage, right? Because maybe the other companies only deliver water and they said, no, we can't deliver food. Well, go ahead and say yes. And then you put it together, do what you have to do. Maybe you have to work with another food company and just say, give me your food and I'll deliver your food with the water. Make it easy for you so you don't have to prepare the food, right? Always look for a way to service the customer and make them happier than they would be with another company. So serve the customer. That's how you're going to get business. Okay, I think that's going to do it, everybody. I got one more question here. So you can give samples. How do you work around TowerCo or infrastructure business? Okay, it says, and I got a question here. In some industries, you can give samples. How do you work around TowerCo or infrastructure business? I'm trying to get understand why freeze give out samples. Samples, you don't have to give out. Let's say, for example, you give a 16-ounce bottle of shampoo, right? That's the product you sell. Well, you can also buy 1-ounce containers. Just put a little bit of shampoo in there, 1 ounce, and you give those as free samples because it's just 1 ounce. It won't cost you much. Whereas you sell it by 16 ounces, right? So what the product that you sell is bigger, but you have a couple little bottles of 1 ounce, and you can give those as free samples to people with a little card with your name and number to call you or where to order online or something. And you just work that into your cost. It's part of your advertising cost, right? You want to keep your advertising cost somewhere to around 3 to 6%. Once you're an established business, you want to keep your advertising somewhere around 3 to 6% of your gross income. When you're starting out and you're doing initial promotions, think about doing 10% to 20% of your gross income as advertising promotion. So if you're giving out free samples, that's part of your advertising promotion. So you're going to spend a lot on advertising when you're first starting business. And then as your business becomes stabilized, and your gross income starts to rise, that percentage of advertising is going to go down from, say, 10% to 5%, right? That's sort of the general idea. So do samples, but just include that into the cost of your advertising, your promotion. Let me see. I'm from Nigeria. Who is this from? Ekopima. Okay, I'm from Nigeria. We have a vast terrain for business to strive, for many investors are skeptical to invest in our country. As before, it therefore make the country to be depending on exporting instead of importing and production. No matter what, Nigeria has the largest field of business in Africa to stand strong. The following areas are doing well: telecom, security gadgets, pharmaceutical, and agriculture. Exporting, importing. Well, if you're having high inflation, and that's sort of sometimes something that occurs, you'll in your countries and in any country right now, any country is where inflation is rising, you want to be able to export, because as inflation rises, your exports become more affordable to other countries. So when you import, it's a little risky if you all of a sudden if inflation hits you. But now in the case of right now, if we can get gasoline prices to come down, petroleum prices to come down, and inflation starts to come down, then if you're an importer, right, you're bringing in products from another country, now your products are becoming more affordable to people in your own country. So if you have inflation swings where inflation goes up and then it comes down, inflation goes up, then it comes down. If you have one business in exports and one business in imports, then you'll make money on you'll make more money relative than one or the other. So it's always good to import something and it's good to export something. So you always have, so one way or another, relatively speaking, you're going to make money off of inflation. Let's put it that way. Let's see, Danielle, I think we should be business wise. If I say it well, for example, if something is selling R50, so the person when doing their business can sell hers at a cheaper price, so the more customers can come to her. Yeah, there's a whole strategy. You look at your margins. It depends. If you're doing clothes, I worked in a business that was doing sporting goods, like sporting clothes and sporting items, bicycles, ski equipment, camping equipment. Every area, every product category had its own margin. So for example, if you do accessories, sometimes you want that margin to be around 50, 60%. But if you're doing clothes, maybe 30 to 40%. And then if you're doing bicycles, maybe you want it between 20 and 30%. So lower margin because that's a higher priced item. So every product in your store has a different margin of profit. And you have to balance out those margins to how long that item will stay on the shelf, how long it will sit there before you can actually sell it. But like any business, you're going to have to do an analysis to what is the optimum price that you should sell an item to maximize your profit. Because if your price goes up too much, you won't sell any, right? If your price goes way down to almost zero, you can sell it, but you won't make much money. So there's a happy price in between really high and really low that's going to maximize your profits, where the customers will say, okay, I'll buy it. Or more customers will say, I'll buy it. And then you have enough profit margin there to actually make more money. It's a graph, it goes up and then down. You want to hit that price up at the top where your profit's maximized. So you should be doing that for all of your products and services. And then beyond that is once you get those that optimal price, you want to do like a promotional strategies, promotional campaign where you're advertising, you're giving certain discounts. So you want to work your discounts in such a way that you will get even more people to pay that price that you want. So you might want to raise the price a little bit and then discount it down. And some of your products are selling at normal price and some of your products are selling at a discounted price. But if you can get it to around that perfect price to optimize your profit, that's what you want. And you can use different promotional strategies to get more people to buy at that perfect price. And that's what you want. So you'll have to study some marketing strategies in order to do that. First of all, you're going to need to know what price is optimal for optimizing your profit. And then you start working different strategies to get more people to buy it at that price. And that's what you want to do. That's how you start making that profit, increasing your profit. Right. Danielle says you can slowly raise the price. I would, let me see if Syed, I think Syed just left. Okay. Raising the price slowly. Well, if you have inflation, right? If your costs are rising, well, you're going to have to raise your price. So your cost inflation is going to push up your price. But if you just want to raise your price because you have more people buying your product, or you have more demand for your product, there are different strategies for that. You don't want to lose customers. You want to be very careful when you're raising your prices. What you may find is a better strategy is adding on more products to your line of products. And then the products that you add in, give them a higher margin of profit. Hear what I'm saying? So you're not raising the price of the products that people love. You're just adding on some other products that will give you a better, a higher profit margin. And then they'll buy those products they love at the prices they always accept. And they always, they're used to those prices and they'll keep buying it. And then they'll say, okay, I'll buy some of these other products you have now. And so that's how you can take that higher demand and move it into other products with a higher margin without sacrificing the price that people love, right? So be very careful about raising prices on products that people love. Your first option should be developing other products that they can buy or other services. Add on other things. So yeah, increase your sales, not by raising prices, but by adding on other products with a higher profit margin. Yeah. That's one thing I don't think a lot of people think about, right? They just think about, oh, I'm going to have to keep raising my price to make more money. No, just add on more products with a higher profit. So if the product that people love has a profit margin of say 30%, which means 30% of the price is your profit and 70% is the cost. Okay. You want to increase your sales? Well, now add on some products that give like a 40% margin, right? So now when they buy those products, only 60% is cost, but now 40% of that product price is profit. So you'll actually see your margin, your overall margin of profit go up. Because you were selling at 30% margin, but now you have some other products selling at 40%. So that's going to slowly bring up your profit margin, say from 30 to 32 or 33%. And you didn't raise your prices, but you raised your profit margin. And that's how you want to think. And you may say, oh gosh, maybe I could find another project where I could actually get maybe 60% profit margin on it, right? And I'll just sell a few of those. So if you can get a couple of products that have a high profit margin, like 50, 60%, bring those in, because then that will raise your overall profit margin for your gross sales. But you're not sacrificing that relationship with the customer by just raising prices. You're just coming out with new products with a higher profit margin. They don't know your profit margin. You just give them a good price with a higher profit margin, and always, because that's really what you want. You want your profit margin to go up, but you don't want your customers to see that the prices are going up. Do you hear where I'm going with this? It's a better strategy to actually increase your profit. Thanks for your presentation. Gross domestic product depends on several important factors. Okay. Yes, human capital, resources, technology innovation, political stability, yes. Infrastructure, yes. Yes, trade, market, entrepreneurship, macroeconomic stability. Yeah. Yeah. So that's Hans Gerber put in a wonderful thing there in chat, showing that all the different factors that really can increase gross domestic product, GDP. It's basically, the resources and the capital, the infrastructure, the human capital, people, everything you have to work with to actually be productive. Okay, I think that's going to do it. Hope you're all going into some type of business. I've started a lot of little businesses myself. I had a business consultancy firm. I had food products. I had bathroom products like shampoos and soaps and air sprays. I had other products, beekeeping products, candles, surf wax for surfboards. Um, I built drums, hand drums, harps. I did stained glass art. I've had a lot of little projects over the years. I can't think of them all right now. But I mean, I even did beekeeping where I sold honey and beeswax. I did other services. You just do what you can to survive. You know what I mean? And you learn in the process. But it's always good to have that entrepreneurial spirit to say, okay, what can I do now? What sort of product can I sell? I need to get out there and talk with people to find out what they want. What do they need? And then I'll go to work, building a business to service that need. Another business I had was making little burgers out of soybeans. Those tempeh burgers that they make like in Japan. I had to build a big box with a light inside to keep a certain temperature and a certain humidity level inside. And then so I would make up the soybean patties and put them in there, mix it with some mold, a certain mold that will turn the soybeans into like a patty for a sandwich. So I built it all. I learned how to do it. And so I was selling tempeh burgers. One business I always wanted to get into was building solar collectors so that out of wood you can build a solar collector and then line it with like aluminum foil or mirrors or something. And so when the sun comes down, you have this parabolic mirror that reflects the light up to a cooking pot. And then so you hang the cooking pot where that light collects, or you have a little platform that the cooking pot can sit on. And so people don't need to cut down trees. They don't need to buy wood. They don't need to buy fuel. And as the sun comes out, they cook for free, right? And so if you can make these parabolic mirrors at low cost, and make a profit margin on them, you can actually make some good money if you have a lot of people buying them and cooking with them. And then they can use the other fuel sources for other things. You can actually save them a lot of money because the sun is free, right? You give somebody the ability to cook their food for free for the rest of their life. So that's a business I always wanted to try to get into, but I never did, was doing parabolic mirrors. I think in many parts where people are you buying wood to cook, you can come in and say, look, I'll give you something that you can actually cook for free. Not give them, but I have a product that we actually can cook for free. And you'll have to do a couple of tests. I made a parabolic mirror that was it was almost 2 meters wide. Let's say 1.5 meters wide, right? A parabolic mirror. Oh my gosh, it was too hot. I would put the pot in the sun and the water would start boiling like within 15 seconds. It was too big. So if you do a parabolic mirror that's maybe 0.5 meter to 1 meter wide, it's more reasonable. So you can actually have a sort of a small parabolic mirror that you can build and then sell. And the way you do that is going through a production so that you're cutting all the pieces, and then you have one person's cutting all the pieces of wood that you need. Another person is assembling it. Another person is laying down the mirror or the aluminum foil. And then you can produce a lot in one day. And then you work out a distribution system where you can take it out into the country and start selling them. And with anything, you just work out your costs and how much you can sell things for. And you may think, oh, my costs are too high. I won't be able to sell this. Well, then you have to start thinking creatively to think, okay, how can I change this product? How can I change something to bring down my costs or to increase my market? So then you have to start kind of working through these problems. Don't just say, oh, my costs are too high. No one's going to buy this thing. You have to start thinking how to solve that problem so that you can overcome it. Because once you solve the problem, then you can go into business. And it doesn't mean that the business can't be done. It just means you haven't figured out how to do it yet. So give yourself some more time thinking about it and say, well, let's see. That's interesting because this other company, let's say you have to deliver your products to the country and you think, oh, the fuel cost and the cost to maintain a truck, I can't do that. That's going to be too high. Well, then you think, okay, who else goes out into the country driving a truck? An agricultural farm, maybe, or produce. They're going out into the farm country to pick up some produce and bring it back into town. And then you talk with that company and say, look, I have these little mirrors. Can you drive some of these out into the country and sell them? And maybe I'll have a representative go with you so that when you go to a certain market, we'll get out there and try and sell these to the people in the market so that they can cook their food for free in the market. So that way and then you give them a little percentage of the sales for being able to ride out in their trucks into the country with them. And then you say, okay, now it'll work, right? Because I'm sharing the cost with with another company. I'm sharing the cost. And in many ways, that's why a cooperative works really well, because you can have people doing different projects in a cooperative, and you can actually share employees, you can share knowledge, you can share resources, you can share machinery, you can share computers, you can share time, and that just brings down the cost for everybody. That's why cooperatives can be a really efficient business, because You have to learn how to share resources with other people and other businesses. So does that come from you personally? Please educate me more on how to develop the cooking for free technology. Yeah, I mean, you can go on to YouTube and just look up parabolic mirror for cooking. I'll write that into chat. Parabolic cook, parabolic mirror, parabolic mirror for cooking. Just and then see how people make them. And then look at what sort of materials you can work with, and because you may find, for example, car tires and truck tires, right? After a certain period of time, people just throw those tires into a big pile, right? Right? There's probably some place outside of your town where you can look, and there's like this huge pile of tires that have just been abandoned because they either broke down or whatever. And so they can't be used anymore. So you have these old car tires and truck tires. Well, think about that. They are round, right? Just go out there and pick them up for free and say, "Can I have 100 of those for free?" Sure, just take them away. We don't need them anymore. And then you have all these tires. And now all you have to do is just lay down a mirror inside that tire, and you have your parabolic mirror for cooking. And you have a free tire to hold that in place for you, right? And then maybe all you have to do at that point in time is build some sort of tripod to hold the pot up above the parabolic mirror. So you think, look around you, and you might think, wow, there's like all these things that people have just thrown away, like car tires or barrels, right? Sometimes you use big barrels for like cooking oil or oil itself or some sort of, I don't know, some sort of liquid, and people throw out the barrel. Well, you can get that barrel, cut it down a few times, and make 3 stands for your parabolic mirror for free, because these are things that people throw away. So if you can use that material, think about the what's that instrument from the Caribbean where they take a a, a a barrel, and then they make different notes so that they're playing the notes. I can't think of the name of that instrument right now. Oh, if anybody knows the name of that instrument, put it into chat. But you just what did they do? What did they do? They just found these old barrels being tossed away, and they made these beautiful musical instruments out of them for free. All they had to do was just pound them with a hammer until they got the notes. Does anybody know what those instruments are called? I can't remember. But that's the thing, is just look around. You can find things that you can just get, transform them, and resell them. I have a brother who lives in Honolulu, Hawaii. And every night, no, it's not the xylophone. It's not the xylophone. It's a metal drum. I can't remember. I'm having a memory moment. But I have a brother in Honolulu, Hawaii, that works every night by riding a bicycle around the streets of Honolulu with a cart behind the bicycle. And he goes around looking for things that people are throwing out onto the street. Furniture, chairs, old pottery, stuff that people are just throwing away. And he will go ahead and find some things that he likes, throw them into the cart behind his bike, take it back to his apartment, and then refurbish it so it looks like new again. And that's how he makes a living. I had another friend that when exercise equipment was really popular, he would go through the newspaper every day and find people that were selling a certain exercise equipment. And he would negotiate a good price with them and go buy it. And then he would resell it at a higher price because he knew how much they should sell for. But so he would get there first to get it at the lower price and then re-advertise it at a higher price. And that's how he made a living doing that. I mean, that's how he made a living doing only that. He made so much money just by buying something from the newspaper and then reselling it in the same newspaper at a higher price because the demand was so high. He knew how to work with that. So yeah, you learn your industry, you learn your market, you learn what prices people will pay, and you learn how to fix up equipment. So if you buy some exercise equipment and it's broken down a little bit, you know how to fix it. And you know the parts you need. Maybe you have another piece of a physical, exercise equipment that you bought. You can grab some parts from that and fix this one up and make it look like new again. And then just by getting parts off of another exercise equipment, now you have the parts to make this one you bought at a low price. And now you can sell it at a high price because it works perfectly now. So you just use your resources, look around, what's available, what materials can you use? What do people need? Oh, there's just so many business ideas from food to how to cook food to fuel, how to produce fuel. One of our students, she was from Kenya. She was working with when a mine goes into an area and they mine the land, and you have to bring that land back to life. And so there were certain plants that she was working with in order to bring that land back to life so that some things would grow again and an ecosystem would begin to develop again because the land was devastated. And so she was working on hemp plant. So she was going to grow hectares and hectares, thousands of hectares of hemp to bring the soil back and to bring the ecosystem back to life. Well, the thing about hemp is you can dry the hemp and throw it into a machine and create these logs of fuel for free. All you have to do is buy the machine. And then you just go out and collect the hemp in these huge quantities. And then, so you're basically turning a free resource into a product that you can actually sell at a good price. Because when people go into the markets or in their homes and they want to cook, they can use these little logs, these little hemp logs, throw them into a little oven and cook. And it's actually lower price and it's better for the environment. Instead of cutting down trees, most communities don't want to cut down their trees. They have to, but they don't want to. They'd rather have their trees grow up more. And this is the one way to do it is you go out and get a hemp source and then produce these low-cost logs and sell those to people instead. And there's just so many business ideas. So, but once you get into a business, you want to know, its value. You want to know how to determine its value and how much you can sell it for. And then you have to think, how much money do your customers have to spend on this? Then you have to think, okay, they're spending this much money to heat their food. And then you think, well, if I sell them this, it'll actually cost them less money to buy this hemp log to cook with. Because once you know what your customer's already spending, you can compare it to what the value of your product, you think, I could save them money and make it easier for them to cook with this log. So once you know that your product is competitive and will give an advantage to your customer, you're in business. You can start and grow and learn how to be more efficient in your business so you can bring down your costs. So you're going to have to do some research, talk with people and say, how much does it cost you to cook your food? How do you do it? What are the problems? Do you have to go out into the forest and cut down a tree? How much time does that take you to do? And is it wear and tear on your vehicle? How much does it cost your vehicle to go out into the forest and cut down the wood? Look at all of their costs to get their fuel to cook with. And then you say, well, look, if I'm going to make these hemp logs, I'll just deliver them to you for a lower cost. And you don't have to use your truck or anything to go out into the country, cut down logs. You'll save money, wear and tear on your vehicles, and it'll cost you less, and I'll deliver it straight to you. And they can't say no because you've just given them a much better product at a lower cost. They can't say no. And so you're in business. Once you know that you can compete with what they're already doing, they can't say no. They know it's best to work with you because they're going to save money and have more time for other things. So yeah, know your industry and be able to do, if you want a book, let me put a book into chat right now. And this book helps you determine a lot of here, let me go ahead and get the book in here for a second. This book is called Managerial Economics. It's one of my most favorite books. You'll see it go into chat right now. Once it's up there, you'll just be able to click on it and download it to your computer. But with this book, you'll be able to know what your customer demand is. You'll be able to know how to set your optimal prices. You'll be able to know how to do all kinds of analysis of a business to optimize profits, costs, everything. If you want to become a business consultant, like for example, to small businesses and medium-sized businesses, you can use this book and then sell your services by knowing how to use the information in this book. You can go out to any business and say, look, I have the knowledge to make your business more profitable. Tell me what's going on here. And you'll see in this book, you'll learn how to look at a business and see where you can help them to make more money. So with this one book I just gave you in chat, it gives you the knowledge to go out and help businesses save money, and they'll pay you for your help. Right? I just gave you a free book that you can make money from. You could either help other businesses or you can actually make your own business profitable by using the equations and the principles in this book. And the book uses like Excel sheets, so you'll have a spreadsheet of what you're doing, so you can do an analysis. It'll actually give you examples of the Excel spreadsheets that you can write, and then you use those Excel spreadsheets to optimize your prices, optimize your costs, find out cost, supply and demand, so many things. And there's a lot in that book. There's a lot more that I'm saying. But if you're going to run a business and you need to know if you need some math, need to do some mathematics to figure out some good numbers, that's the book I would recommend. I haven't found a better book. I mean, it's kind of like microeconomics. A lot of managerial economics books you'll see are basically microeconomics. This one puts microeconomics into the manager's hand and says, this is how you can apply it directly to your business to make money. So that's why I love this book, because it makes it all so practical. All right, everybody, I think that's going to do it. Have a wonderful day. See you back tomorrow. Hope you all go into business. There's so many things you can do. Just keep your ears open, keep your eyes open. And you'll hear somebody one day say something and you'll be like, hey, I could start a business with that. Someone says, I wish you'll hear somebody say, I wish they had, I wish they did this. I wish I could buy something like this. And then you start thinking, there's my business idea. How can I put this together? And then do a little research and see if it'll work out. All right, everybody. I think that'll do it. It's good to spend time with you. See you back again tomorrow at the same time. All right, everybody. I'm going to throw up a reaction button too. There we go. I will end on one note though. If anybody's interested in putting together a cooperative, I put together cooperatives in Hawaii. And to help the immigrants coming into Hawaii be able to start their own businesses. So I developed a certain type of cooperative where people with different business ideas could come together under one cooperative and work together and share resources to do each of their own businesses and to grow their own businesses. So if anybody is interested in putting together a cooperative, I've done it myself. I have spreadsheets, I have bylaws, I have articles of incorporation, I have all the paperwork that you would need to put together a cooperative to document it and then start doing it and how it works. I got very sophisticated, so the spreadsheet that I used for the accounting was very sophisticated, but it was once you learned how to use it, you just had to put in numbers and everything would be figured out. All of the accounting would be figured out automatically because everything was linked on an Excel spreadsheet. So you just put in your costs, you put in your payroll, everything just comes out, transfers automatically to all of your accounting accounts. So I made it very efficient and easy to use. So if anybody's interested in putting together a cooperative, you can make money in a cooperative. Once you start small. I did an analysis of, if you just one or two people working together, growing the cooperative, there comes a certain threshold where you say, okay, we need to get another person involved in this cooperative. And I know where that threshold, you can actually calculate that threshold. And then another person will come in, start producing, increasing the income of the cooperative. And then you hit the next threshold, and that's when you bring in another member to the cooperative. So you know how to grow your cooperative so that everybody keeps making money along the way. If you have too many people at the beginning, no one's going to feel like they're making any money because there's like a lot of people, but not a lot of work is getting done. So the pay is really low for your time. So you have to start out slow. And as you reach each threshold, you're bringing in a new person and growing to another threshold where you bring in another person. And that's how you have to do it. So that's the correct way to do it. That's the correct way to build a cooperative. Start where you're making money, and then you'll know when you can bring in another person. And the more people you end up bringing in, the more money everybody starts to make too. So you can keep increasing your income with a cooperative. And that's the strategy you want to go into with a cooperative so that as the cooperative grows, your income keeps increasing, even though you're doing the same work. So that's a cooperative, if it's done right, is the best business model. But most people don't do it right. They don't have that sense of how to grow and maintain, a livable income. And I think I may have done a course on that many years ago in the webinar section. I'll have to check. I think I did. And but yeah, if anybody's looking to start a cooperative, let me know and I'll help you. Let's see, I'm interested in starting a cooperative. Please send it to me. Okay. Oh, gosh. I can't copy a comment, but I can screenshot it. So I'm going to screenshot. Ecopima, I'm going to screenshot your comment there that you want help for a cooperative. So that way I can have your email. There. I got it. So yeah, Ecopima, I'm going to write you an email and ask what kind of cooperative you want to start. Do you have a plan? And get an idea of who you want to work with, because the kind of cooperative I would have you do is you have these members, and maybe one member is cutting hair, another member is working on cars, another member is cooking food, another member is repairing clothes, another member is doing home care for the elderly. Every member is doing something different. But if you're working on cars and all of a sudden you need somebody to go off and get a part for you, you can call up that person who does maybe home care for the elderly. Say, do you have time right now to come over and run to the store and get a part for me? Sure. And they'll get paid for that time. So it's like having many jobs at the same time if you're cutting hair, but you only cut hair for like 2 to 3 hours a day. Well, for the rest of the day, you can be helping the other members of your cooperative doing their businesses. And that way you can increase your income by helping them. And at the end of the accounting period, you have a note of all the time people spent working. And then the income gets distributed for all of their work. It's a little more complicated than that because the managers of their own projects, like if you're a hairdresser or a hairstylist, if you're a hairstylist, you get more money for the hours worked in your project. And the people that come and help you, they get paid at a lower rate, but not a terribly lower rate. So there's still a lot of equality in the pay. But the people who are in charge of their projects, they get paid more for their time in those projects. So I have it all thought out. And back about 15 years ago, it was a new type of cooperative that was being developed in the United States. And so because I was the first one to do it. And so some people from Washington State who developed cooperatives throughout the United States talked with me and said, how do you do this? What's this all about? And they said, wow, this is a really interesting idea. It's a multi-project cooperative. It hadn't been done before. Usually cooperatives either do one product like food or agricultural products or electricity. But I was doing a cooperative where all the members did different projects, different things for work. And it was a new idea. And so there are cooperatives developing around the United States from the idea that I developed 15 years ago. So if I can give you the idea so that you can start developing the idea where you live, I'm here for you. Oh, do we have more emails coming in? Oh, okay. Let me do another screenshot here. Oh, okay. I see 3 more. 4 more. Okay. Let me go ahead and put that into a Word document. And Ecopima. Yeah, basically, we want you to be successful. We want to give you ideas, innovative ideas, that's going to make you successful in life. Did I get everybody? Yes, I got all your emails. Okay, we're going to stay in touch, get working, and I guess I'm going to help you make money. Let's just put it that way. I want to help you make money and be able to make more money with your work. That's what it's about. I guess that'll do it, everybody. Thank you for your time, for being here and your presence. Let me go ahead and let you unmute your microphones so that you can say thank you and bye until tomorrow.
Thank you very much, Dr. Lambert. Goodbye.
Thank you. Thank you very much.
Thank you.
Thank you so much.
Lambert,
Thank
thank
you,
you very
thank
much.
you.
God
Thank you
bless.
very much, Doc.
Bye-bye.
Thank you. Thank you.
Mm.
Thank you.
And remember, if you're in business already and you need some business advice, just ask me. How would you solve this problem? What do you think I should do? You know, just write to me, keep in touch, and I will do my best to help you make more money.
Thank you.
Okay, thank you. Thank you very much.
you.
Bye-bye.
All right, bye-bye, everybody.
Bye-bye. Thank you.